Guys, Vance told reporters while on a trip in India that, quote, it's time for them to either say yes or for the United States to walk away from this process. And YouTube turns 20 today. The Google-owned company, if it were a standalone business, would be worth around $500 billion. That's according to analyst Ab Moffett-Nathanson. And according to SimilarWeb, it's the second most visited site in the world, lagging only behind Google with more than 20 trillion videos uploaded to the site as of this month, David.
Yeah, we talked about that when Moffett-Nathanson came out with that valuation. Would be above that of Netflix, which is $450 billion. Not clear that it will ever trade publicly, but we'll see. Silvana, thank you. Up next, we're keeping an eye on Bitcoin. It is rallying back above 90,000. A closer look at what's driving those gains. As we head to break, by the way, check out shares of GE Vernova. It's surging on its latest earnings. It was a beat, swinging to a profit, and of course benefiting from the larger rally going on right now in stocks, with the S&P up some 3.2%. We're right back.
Xfinity.
Bitcoin is firmly back above 93K right now, up double digits over the past week of trading. Dom Chu here with more. Morning, Dom.
Hey, Sarah, so it's even more so. It's up about 25% since the lows that we saw back earlier this month, just that first week of April. So if you take a look at the price chart here, that move that we've seen has been roughly 26% to the upside. And we are now just about 15% away from the all-time highs in Bitcoin. Now, that move higher has not resonated so much in terms of the all-time highs against some of the stocks that are part of the ecosystem. If you look at Strategy, for instance, or Mara Holdings or Coin, each of these stocks has done very well over the course of the last week and a half or so, recovering from the lows, but are still way off where they were earlier on for the highs this past year. So keep an eye on whether or not that trade has a catch-up more so than at one point. Bitcoin is still outperforming these guys, these stocks, in terms of the way that they are from their record highs. And then take a look at the real catch-up trade that some traders are watching right now, and that's in Ethereum. Ethereum has also gone up by a similar percentage amount short-term, but it's way off where it was at the highs over the past year. So as Bitcoin has held up very well over the course of the last year, even in terms of the price volatility, Carl, Ethereum has not played catch-up yet. It could be something to watch if this has any steam left in the cryptocurrency trade, Carl. I'll send things back over to you.
All right, Dom, talk soon. Dominic Chu. Still to come, a closer look at Tesla's big rebound today, up 8%, trying to turn positive for the month of April. And as we go to break, also watch shares of Vertiv. Talked about it with Kramer this morning, soaring more than 11%, although off the session highs, better than expected earnings, raised guidance. Stay with us.
Welcome back to Squawk on the Street, where right now you're currently looking at CNBC's newest subscription streaming product, CNBC Plus, which shows our live enhanced data feed and the latest headlines. You can stream Squawk on the Street, the show, or any of your other favorite CNBC shows anytime. Sign up now, cnbc.com/plus. And Carl, as we speak, Treasury Secretary Bessent is speaking here in Washington at the IIF, which is the global banking meeting. And he's talking about the role of the IMF and the World Bank, where I am during these spring meetings, saying that they do have enduring value, but sort of saying some of the mission creep, how they've gotten into more social, climate, gender policies. And just one headline, because we just spoke to the World Bank president about this very topic, that I noted when Secretary Bessent was talking about the World Bank, he says they shouldn't be treating China as a developing country. It's notable to me because we just heard from Ajay Banga, the president of the World Bank, who's been in discussions with the Trump administration, and he was careful to say China is no longer a developing country. So they're clearly getting the message amid questions going in about whether the Trump administration would prioritize or look to pull money and defund the World Bank and the IMF. The U.S. is the largest shareholder in both of these institutions. So it's interesting to hear Bessent, on one hand, back them, but also sort of share how they fit into the Trump administration's worldview about what they should be doing.
Yeah, really interesting, the convergence between the meeting and Bessent's comments today and the tape. Speaking of which, Dow continues to remain close to session highs, up 1,100 points now. We're back above 5460. That's a 4% gain on the NASDAQ, 3.3 on the S&P. Every sector's green except for energy, which we mentioned, still lower, but VIX is below 28, and the dollar has recovered somewhat, David, but hasn't quite managed to get back above 100 on the DXY.
Yeah, talked a bit about that with Yardeni. All right, we're keeping an eye on shares of Tesla, of course. They're, I think, right at session highs right now, up some 8+%, despite, of course, what was not a particularly good quarter, at least, if you judge from the top and bottom lines. Auto revenue, for example, declined by 20%. CEO Elon Musk, though, delivered some news on his leadership at the company.
Starting next month, I'll be allocating far more of my time to Tesla. And now that the major work of establishing the Department of Government Efficiency is done.
Joining us, William Blair's Jed Dorsheimer. Jed, why you have a buy in the stock? Why?
Well, one, I think that what Elon has built and done and kind of moving to vehicles with a lower cost basis is, and on the energy side of the business, that's something we really like. And I think that people underestimated energy. And I think, quite frankly, last night was an example of that, where 14% of revenues, 25% of profits, which showed some resilience. So everybody knows that the auto side of the business has been under pressure. I guess it's debatable. Could we have, should we have pulled the plug on that from a near-term trading move? Maybe. But I think, looking forward here, the energy business is operating better. Elon is stepping back from Doge to focus on Tesla, and you're getting news out of, de-escalation from a tariff perspective. And if that plays out, I think Tesla, has more upside than downside.
Yeah, I noticed from your coverage list, it's not a surprise you might be focused on the energy business, given you do focus on a lot of those companies in that general industry. We haven't talked that much about it. Obviously, a lot of the enthusiasm seems to be around robots and auto and robot taxis as well. What are your expectations for energy then as a percentage overall? Will it continue to increase in terms of the overall percentage of profits of the company?
Sure. I mean, listen, it does have tariff exposure. So that is a vulnerability here. But if you do get a de-escalation, we have said that the return on invested capital of Tesla's energy business is better than any of their other businesses from our perspective. And I think we're seeing that bear fruit. Our analysis revealed that the need for mega packs and battery storage is far greater than most expect, largely because the variability that renewables have pushed onto the grid, both domestically and abroad, has created a lot of problems And so to fix some of those problems, you will see a need for more battery storage. So we're very bullish on that. In fact, I'm out here on the West Coast at an energy conference with a lot of policymakers here. And, hopefully, we'll see. But I think what you're probably seeing is some capitulation off of a bottom. The resilience, might even see some short covering that's driving this. But I think the resilience from energy is definitely the highlight.
Yeah, it would certainly seem to be an important component of the overall earnings picture. As for Musk coming back, I mean, you see it clearly as a positive in terms of his focus?
Yeah, I mean, that being said, there's brand damage. And so, we have to see how, I think this puts the auto side squarely focused on robotaxi and the launch of that. And that increases the risk profile. We're disappointed, quite frankly, to see that there is no Model 2. We were, quite hopeful that would fill a nice gap for the auto to complement what we like on, the energy side of the business. And so, if Elon can come back and help with that focus, then that's going to be a positive, and we'll see if this brand can return.
Yeah, and real quick on tariffs, you mentioned the impact perhaps on energy. And listen, even though they source a lot domestically and obviously manufacture domestically, what do you think the impact will overall be of tariffs on both autos and energy?
Oh, for the energy side of their business, it would be a clear negative. If you continue at this rate, that business will see the profitability hit. So that is a risk. So, we're clearly in the camp of we're monitoring. If Besant's comments bear fruit and we see some de-escalation, that is a driver. But if it stays at status quo, that is a negative.
Okay. Jed, appreciate your time. Thank you.
No problem. Thank you.
Still to come this morning, we're monitoring the Treasury Secretary, just wrapping up his comments. Speaking about trade, we'll get the highlights as stocks continue to build off of yesterday's insane rally. Stay with us.
Traditional safe haven trades like Treasury bonds have not exactly been acting like safe havens during the recent bouts of market volatility, but one trader is still using Treasuries as a part of a strategy to help insulate portfolios from economic threats down the pike. Tune into our Market Navigator segment later on today on Power Lunch to find out how, 2 p.m. Eastern Time.
Share more.
Coming up in the next hour, I will sit down with SEC Commissioner Mark Ueda, who up until yesterday has been leading the Trump SEC. We'll talk about what's on their plate, everything from crypto to Doge. Live from the World Bank here in Washington, D.C. That's on Money Movers at the top of the hour. We'll be right back here on Squawk on the Street. Stay with us. We've been monitoring the Treasury Secretary, Scott Bessent, who just finished up at the IIF Global Outlook Forum here in Washington, talking about the World Bank, where I am, the IMF, the global system. Eamon Javers joins us from the White House with the latest. Eamon.
Sarah, that's right. The latest is President Trump is taking a walk. We got some live pictures of this. This is the president right now on the north lawn of the White House. He's meeting with officials. We don't know exactly what he's doing. They're gesturing to the gardens, the trees. He was looking back at the White House residence from the gate right on Pennsylvania Avenue. The president has attracted the attention, though, of a number of members of the media who are all here on the north lawn driveway. We can't go over to where he is right now, so we can't tell you exactly what he's saying. He did just wave and shout a few words to the reporters here who are assembled, who are trying right now to encourage the president to come over here and talk to us. And we'll see if he does that when he gets done meeting with these officials that he's meeting with now. The president has taken some interest in the grounds and the area around the White House, the trees. He was out the other day inspecting the asphalt just in the West Wing driveway. So he's focused on a beautification campaign here. That might be what this is about, but we'll have to wait and see what officials have to say. Meanwhile, as you say, the Treasury Secretary is just wrapping up his remarks here in Washington related to the World Bank. He said a couple things that are important. One is that about 100 countries have now come to the United States to ask for trade deals. He said those discussions are underway. He also said that there's a need for the United States to, in his view, rebalance global trade, and he explained why the United States is doing this. Here's what he said.
Intentional policy choices by other countries have hollowed out America's manufacturing sector and undermined our critical supply chains, putting our national and economic security at risk.
So the Treasury Secretary there saying it's a matter of national security and economic security that's at risk here. Also taking a swipe at the IMF, suggesting that it spends too much time on diversity and gender issues and that kind of thing. So nothing new, though, on trade and sort of where we stand. And as I'm talking to you guys, the reporters behind me here are trying to get the president to come over and talk. No indication that he is going to do that. He's continuing with what looks like an inspection tour of the North Lawn. Back over to you.
Yeah, I was going to say maybe he's just planning new landscaping there for you guys. Unclear, Eamon. Try to confirm that for us. As far as Secretary Bessent, you know, it's interesting. I think the important thing is that he backed the IMF and the World Bank, even if he did call them out and criticize them. The U.S. is critical for these multilateral organizations, which have basically been in charge of the global system since Bretton Woods. The fact is he's due here at the IMF and the World Bank to take lots of meetings and bilaterals with other finance ministers. And a lot of them, I mentioned the UK the last hour, are supposed to be coming with draft deals. And I just wonder what the likelihood is that we will get some things signed this week, next week, you know, soon on trade.
I mean, there's a palpable desire here at the White House for trade deals. You know, they've suggested that they are very much focused on getting a deal. They're very much focused on making sure the stage is set for a China deal. The Treasury Secretary also talking about this being a perfect opportunity for a deal with China. So we'll have to see, guys. David, back over to you.
Eamon, thank you. Continue to monitor the president's landscaping efforts, perhaps, as well. We're monitoring, of course, a market that is quite strong this morning, in part on the hopes that there will be true engagement with China and far lower tariffs. As you see, the NASDAQ right around that 4% gain. We got a lot more market coverage for you straight ahead.
You download Dave. Will you marry me?
I will.
Insurance.
All right, Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the new trade war headlines driving stocks all over the place today. Mostly higher, as you know, not as high as we were, however. We will debate the markets. We'll debate the headlines. We'll debate what to do with all of this with the investment committee. Joining me for the hour, Joe Terranova, Jenny Harrington, Steve Weiss, Sarat Sethi. I'll take you to the market. I'll show you exactly what I'm talking about. Yes, we're green, and we're nicely green, and the NASDAQ is still a near 500-point gainer today. That's near 3%. Dow is up better than 1,000 points, and it's pulled back off of that. So that's how the market looks at straight up 12 noon here in the East. Joe, I guess I'll begin with you on what we're playing with, okay? Last night, Trump, no intention of firing Powell. Last night, Trump, tariff rate on China won't remain at 145%, won't be anywhere near that high. It'll come down substantially. It won't be zero. 9:40 or so this morning, the Treasury Secretary, the Wall Street Journal moving a story says, quote, White House considers slashing China tariffs, could be by half, to de-escalate the trade war. Trump hasn't made a final decision. Treasury Secretary, within the last hour, no unilateral offer from Trump to cut China tariffs. Full China trade deal may take 2 to 3 years. What do I do with all that?
This is exactly why we said on Monday it's very difficult, based on where the market was, to think that you could play the market from the short side and expect downside, because you get the tweet. So you have a very clear softening of the rhetoric over the last 24 hours. That is obvious to all of us.
Including our Eamon Javers at the White House today, who described it as a, quote, tonal change. Clear tonal change.
Without question. With that being said, it still remains a highly volatile environment that dictates if you are active, you are trading. And I know a lot of people that watch the show, that's uncomfortable for them. I know for some people in our universe that's uncomfortable for them, but that's what it is. It is a trading environment. Yesterday, when Treasury Secretary Bessent's comments came out regarding what he said in a private closed-door meeting, you saw the rally in the S&P, okay? I was able to buy some S&P futures. I rode the S&P futures along the way in extreme volatility. And then guess what happens? The market literally slams into the ceiling this morning, and we have a chart to show this. So while you have all this crazy volatility, treacherous environment, mercurial nature of markets, you actually have some technicals that you can rely on. So let's show this chart. If you look at the month of March, what you will see that in the low for March, 5488 is your number for the S&P 500. That actually, which was the floor, now becomes the ceiling. On April 9th, time to buy, right? Time to buy. The high that day, the intraday high is 5481. Today we get up to 5469. And foolish me, I didn't sell my S&P futures there. I'm still sitting with them. I have a stop down below. Can't lose money on them, but certainly I should have been a seller up there.
It does appear to me, based on this tonal change from the president himself, and I think we can agree, if you listen to his comments and you read between the lines and you listen to Eamon's reporting, which I advise you do, because his on-the-ground, boots-on-the-ground stuff at the White House yesterday moved the market. Describing this, Weiss, as a, quote, tonal change, that it appears to me that the markets have gotten the president's attention. Maybe a little bit later than people thought and expected, but there seems to be less tolerance for some level of volatility, especially as it relates to what's been happening in the bond market and the currency markets because of the commentary about the Fed chair. So the president softened his tone regarding Jay Powell. Undoubtedly did that. I'm trying to figure out what you guys are supposed to be doing in this market, because on Monday when you were on, I asked you, when you were really describing how negative you were, unquestionably. Are you 100% in cash, I asked? You said, I'm almost completely hedged. I have very, very little exposure.
Right.
This morning you told our producers, I've kept most of my exposure except for sales in Amazon, Google, due to concerns about cloud and consumer spending. Just can you square that for our viewers?
Sure, absolutely.
Please?
So when I hedge, I'm hedging with the indices, with the Qs or VOO. And the reason why I do that instead of selling my positions is because I know, as I've said before, this is going to be a headline-driven market. So I'm able to take those off quickly, and I'll incur my gains on the taxes from short-term trading in those. And I did have gains in those. So keep in mind, when I initiated my bearish outlook and went to 75% cash, it was almost on the day when he was inaugurated. So none of this is a surprise. So that's how I'll continue to play it. I'm not selling Meta. I'm not selling, even though frankly I've considered, because his legal problems, continue to materialize. I do have concerns. I've not sold Microsoft, even though I harbor cloud concerns there as well. But I can't have no exposure. I like those for a very long-term play versus the ones that you mentioned purely for the cloud and for consumer spending on both Amazon and Google. So look, the way I look at it, my view hasn't changed. One day of him negotiating against himself, as we've seen, should not be applauded by the market. This market is trading like it's watching Hulu, where there's a new episode dropping every week, and that in a compressed time, versus like Netflix, which is what the market wants to see, where all the information drops at one and you know what the story is. So
all right,
that's
good
a simple
analogy. I can get behind that.
Yeah,
it's a rare, good analogy, but nonetheless, we'll run with it.
So I remain bearish and concerned about the economy. Okay. The economy, CEOs are not going to change what they've already stated is we're pulling back on investing because they don't know where the road is. Okay. That's going to drive the economy into recession.
I feel like anytime people of Ken Griffin's stature speak publicly, that it's worth bringing the headlines to all of you. Obviously, the head of Citadel is speaking at the Semaphore World Economy Summit, in which he has said I'm past this, within the last 20 or so minutes, that the trade war has devolved into a, quote, nonsensical place, and that the United States is eroding its brand. That's what Ken Griffin has had to say. I think everybody has been watching, and I bring you this too because Ken Griffin, the stature that he has, obviously, the position in which he sits, the company in which he runs, and he's been a supporter of the Republican Party, a donor. He's not naive to the issues that have surprised a lot of people who have been on that side of the support space. This trade policy, which caught a lot of people off guard and has surprised a lot of people in terms of what they thought and what is, and how to invest in that environment. What do you make of what Ken Griffin has said in the greater context of what we're supposed to do when you have the president, the Treasury Secretary making the comments that they did, and the market's just reacting to everything?
Right. Well, I think it's a little silly that the market's reacting to everything because we kind of knew, I think, at least if you looked at Trump 1.0, you kind of knew that you were going to get this. I mean, I think this is on steroids. But when I think about that specific Ken Griffin comment and how it relates to the market today, that's actually not a new comment today, right? That kind of thought about the trade war is chaotic and it's eroding our brand, that's been out there for, frankly, before Liberation Day. People have been talking about that, and it's real. So he's right, but he's also not telling us something that we haven't known and haven't digested. When we were talking before about the tonal change, how long is that going to last? Like 10 minutes? I've been thinking about how whenever you go to visit a friend in Florida, the joke in Florida is always, for the people who live there, like, oh, you don't like the weather? Wait 5 minutes, it'll change. Like, oh, you don't like the tone? Wait 5 minutes, it'll change.
So, yeah, but are you sitting on your hands because you're afraid the tone's going to change 5 minutes?
I'm never sitting on my hands. And I also want to make a point here. When I get bearish and I think the market's going down, it doesn't mean I'm selling out the portfolios or the stocks. I believe that you do not trade in and out to get around bear markets. I believe that you stick it out through them or stick it out through corrections.
Do you think this is a bear market? Like a bona fide bear market? I mean, 2/3 of the S&P is down more than 20%. I mean, David Rosenberg, who I think leans bearish, said, of the current market setup, says, quote, an endless string of volatility in both directions, which is a tougher environment that only happens in fundamental bear markets. I bring that up because I almost feel like using historical reference in your thought process about this particular market is dangerous.
I agree.
Why? Because this was a president-induced bear market. But that means it can also be a president-induced quick turnaround.
Right.
Can it?
I think it could, but I also think there's a lot of asynchrony here. So when you say, do you think it's a bear market? Like, the definition of bear market is down 20% in general. People argue with that. But so you could say, okay, there's a bear market here. There's not a bear market there. As you know, when you say, what do? Do you sit on your hands? No. What you do as a proper investor is you take advantage of it. And I think I'm actually always kind of excited and happy in these environments because there's something to do. So as you all know, I bought 2 great positions. I bought Ryman Hospitality Properties and I bought the microchip convertible preferred. I never could have done that had there not been bear markets in those stocks, right? In the microchip, it was down 60%. Ryman was down 30%. What's the semiconductor index down, like 20 or 30%? There's a bear market in the semiconductor index. There's not one, technically speaking, in the S&P yet. So we're all over the place. And I think what we need to remember is there's opportunity. Everything's going to be treated differently. There's asymmetry, asynchrony, if that's a real word, but there's a lot to do. And again, unlike a trader, because I am a long-term investor, I just get through it. So, well, I'll tell you, I have no idea when the tone's going to change. I have no idea what's going to happen with tariffs. I don't know.
But the market, the market though, Sarat, is proving to everybody who's watching that it doesn't take much, and it's not going to take much to get the market into a much better place. You know, you can go up 1,000 points like you were earlier today. All right, so Besant's comments maybe throw a little cold water on the extreme optimistic level of today, but nonetheless, you're still looking at a 500-point gain on the Dow and near 500 points on the NASDAQ. Right. That just tells you a lot.
It tells you directionally the tone is changing, right? And I think what's happening in the White House is they're testing to see when they say things, what is the market going to react? So the whole Powell commentary was to say, what is the market going to react? And they got the reaction, and it was pretty bad. So what do? They turned it around. The same thing happened 2 weeks ago when, the yields were going through the roof. So I think they're watching the parameters of this. And to Jenny's point, you've got to stay invested and upgrade your portfolio. It's just very hard to time this stuff because we don't know where it's going to go. And now we're in that phase where 20% of the S&P earnings are coming. What is that going to be? So now you've got more data coming at us, and we're going to hear more from CEOs. So I think you have to really understand what you own in your portfolio.
Yeah. So I just want to ask a question. So if you're, which I agree with, you stay invested. If you're a long-term investor, you stay invested. But what are you trying to time then? Because you're just staying in it. So what do you like? Yeah, you're not timing anything. No, you don't care.
Or you can say I'm timing the long run, right? And
what does that mean?
Okay, what it means is that. It doesn't mean anything?
I didn't say anything, Jenny. Relax. Take it easy. Take it easy.
Fired up today. Fired up.
Wow.
No, but if you're timing the long run, here's what you know. You know that over the very long run, the market delivers on average an 8 to 10% return. I actually looked at it recently. It's more like 11%. But
no, I know that.
Yeah,
but I'm just asking.
That's what you're timing, and you're saying, I'm not going to try to be cute. I'm not going to try and be smart. I'm not going to beat it. I'm just sticking with compounding. Okay. I'm just sticking with.
No, but Joe's being tactical. Joe bought more. Wait, hold on. Yeah. Joe bought more of the TLT. Right? It was a trade that he was in.
I bought more Netflix.
But that's a bet that the TLT is a bet that yields are going to go down.
Right.
Obviously, the yields had been getting away from that trade, but now you must have the belief that we're going to get back into some level of normalcy in quotes as to the way that the bond market generally reacts at times of uncertainty. People buy bonds. If the market is sensing a more difficult economic outcome, yields go down, not
Absolutely.
up.
And I also think what's important is that what we're hearing is the messaging from the Treasury Secretary. We're not hearing from Howard Lutnick. We're not hearing from Peter Navarro this week. We're hearing from the Treasury Secretary. And what do we continue to hear from the Treasury Secretary? We want yields lower. And I think that has purpose. I think that has meaning. If there is flexibility on what the rate of tariffs ultimately is going to be, then the argument that tariffs ultimately inflationary and they're going to lead to some permanent inflationary spike, I think that completely falls apart. I think the reality is we've got a dramatic shock to confidence. I think it's going to impact CapEx. I think it's going to impact consumer spending. I think it's going to impact guidance, which really you have to give two sets of guidance right now. Why even give guidance at this point? Yeah. So I think ultimately it means you get the economic contraction. Just one last point. And I do think, look, I understand when we talk about trading, people get uncomfortable, right? I'm sitting here, I'm long futures, I'm probably going to lose money on them. I understand that. But the Ken Griffins of the world, the Jane Streets of the world, the Virtu Financials of the world, they're making money right now. They are. It's an elevated volatility environment.
Those firms make money in almost any environment. That's why they are.
That's a pretty good proposition.
Can I underscore how ridiculous it is saying that you got to be long-term invested all the time? Ken Griffin, who you quoted, David Tepper, Steve Cohn, Renaissance, right? The founders of those companies, of all those asset management firms, are worth between 25 and 50 billion. Naming one, I'm going to be an all-time. Hold on, I let you talk. My narrative is not going to change, regardless of what market conditions are. If you have the capability and the mandate, now a lot of people here don't have the mandate because they're not the asset allocators. They have to be in equities. Now, number one. Number two, to think that to give them the administration credit that they're throwing out all these sound bites to test the market acceptance is just ridiculous.
I don't think
Sarat,
so.
you know it, okay? You're not going to play with the markets trading down 1,000 points or up 1,000 points a day.
I think administrations, for as long as time has existed, have always done that.
I'm not disagreeing.
There's always a trial balloon thrown out by any administration to see how a market might react.
I'm not disagreeing, but none of them are trial balloons of 184% tariffs. They're within the realm of what's reasonable.
Well, that's why Ken Griffin said it devolved into a, quote, nonsensical place.
It is nonsensical. And think of what the market rallied on. Market rallied on Scott Bessent saying, oh, tariffs are going to come down with China. No shit. You mean they're going to stay at 200%? Come on, everybody knew that. For Trump to say, I'm not going to fire Powell. Really, he has no ability to fire Powell. So that just shows the market is, to your point, very nervous and that the headlines drive. But ultimately, the direction is the direction because the smart people in industry are not going to deploy billions of dollars in CapEx on headlines. They're going to wait to see what sells. Now, if he fires Lutnick, which he should, if he gets rid of Navarro, which he should, and brings in people there, then it could be a different story. But tone's not changing while it's all sycophants there.
Okay, we're going to spin this now about the tone changing just maybe towards Tesla. See how I did that?
That was good.
Take a look at the stock because the company obviously had an earnings report last night. Sales down 20%, net income down 71%. Musk saying the time he spends at Doge is going to drop, quote, significantly next month. He had barely, put the phone down, and Dan Ives put out a note raising his price target to 350. Tesla gets back Musk was the headline there, while acknowledging, does Ives, that the brand damage caused, and I'm quoting straight from the note, the brand damage caused by Musk and the White House Doge over the past few months will not go away just by this move, and some of the damage will be sustained forever in Europe and the U.S. But Musk recommitting as CEO and basically leaving his Doge role over the next month is the biggest and best possible news Tesla investors could have heard last night. So again, he raised his price target to 350 from 315. You still have the stock.
Yes, the stock is still in the ETF. April 30th, we rebalance. Everyone can guess what's ultimately going to happen. Let's talk about the earnings. Let's talk about
let me
condition.
ask you, but no, I don't know if everybody can guess.
Okay.
Well, when do you have to make the decision?
April 30th.
Okay. So what happens? Today's only the 23rd. You're telling me that if this doesn't initiate a return of momentum to the upside in the stock, that you wouldn't necessarily keep it? You leading on people to believe that it's bounced come April 30th with your comments now.
So there would have to be, how do I couch this properly in a compliant way? There would have to be a dramatic bounce to restore positive momentum in this stock.
Okay.
In addition to that, remember, something that we do is we prioritize in the definition of quality revenue growth. Their revenue growth is flatlining. Okay, you're seeing in the totality of the Mag 7 a moderation in revenue growth. I think that's why the street is repricing a lot of the Mag 7. So I think this is a company that is fundamentally challenged. I also think in terms of the softening of the rhetoric, wouldn't be surprised if the next thing that we hear is exemptions being handed out that ultimately could positively affect a lot of these Mag 7 companies, because clearly the need to import graphite from China, which is the world's largest exporter of that. Tesla is reliant on that. The tariff is challenging right now. It's margin compression.
Let me ask you this. Has the tone, let's keep this theme going of tone changes, okay? Tone change around trade war, tone change around Musk and Tesla, perhaps. Tone change around data center. We had some concerns recently about hyperscalers scaling back. Maybe not spending as much on new data center investments, keeping the current ones in place, but maybe dialing things back. GE Vernova today, big power orders. The CEO of that company's on Mad Money tonight. Don't miss it. GE Vernova is a big winner, 4%. Vertiv, strong outlook for data centers. Vistra, Eaton, Constellation, all higher. We can cycle through all of those and you can see what I'm talking about. Oracle, Dell Technologies, also higher. Tone change around data center?
Yeah, I think it was becoming so negative because people were picking on, well, Microsoft's going to slow expenditures and Amazon. There is still demand for this, and we just don't have enough supply. The question is going to be pricing, and I think these things were just being sold so fast. We own Equinix in the data center, which also has co-location, and that stock's also been sold off.
So we have Vertiv, but the only question I would have is, do we really have a proper reflection of the demand after, what was it, April 2nd was Liberation Day, quote unquote?
That's the problem.
You know, you're talking about earnings that really don't reflect rather this new environment. So I don't know. I'm somewhat skeptical there.
That's the total crux of the problem, and that's the crux of all of earnings season, right? Is what we're hearing does not reflect what's going forward. And there's no way to extrapolate.
And they have
right
now with the 90-day moratorium. They have a 90-day moratorium and having to offer real negative guidance, hoping that things will change to say something positive. So there's no percentage for them to come out and talk about, to Jenny's point, the reality.
What about tone change around Bitcoin, right, which had a pretty big drop down from its high and has been on the move big time again?
Yeah.
You're pushing up against 100K. You know, it's decoupled in many respects from
the NASDAQ.
Yep. As the dollar has had its issues, Bitcoin's gotten a bid.
I think you'd see it through 100. I mean, you will see legislation come out. We know that's going to happen. You've got a pro-crypto chair of the SEC. You've got a president who has significant family interest in it being approved. So that alone is going to get it through.
But the other problem with crypto is you could also see it move down significantly.
Absolutely.
And that's the problem with it, because there's no future stream of cash flows that you can look towards to value.
There's still no business case.
Right, and there's also still a huge component of the market that's wrapped up in excessive risk and excessive risk taking and concentration. And if things go south, they get squeezed. They may need to sell those holdings.
Yeah, but for now, the momentum is in place clearly. The resiliency is something that I think people are applauding.
Kind of, but it just throws around.
Well, that's what it. Listen, Jenny, if you want to make an omelet, you got to crack some eggs. I mean, you got to step forward and take a little bit of risk sometimes.
There are very few. There are very few
uncalculable
owners
risk.
of Bitcoin you're going to scare out because of the volatility.
Right.
You know.
Well, right.
I like calculators.
All right, let's do this. Let's take a quick break. When we come back, we have more committee moves. Sarat has a new buy, a new sell to tell you about. We'll do that when we come back. We're back above 40K, back down below, excuse me, on the Dow. So we're well off the best levels of the day. Surat, new move. You bought Zoetis.
I did. Leader in animal health care. They don't have the payer regulatory issues that some of the other big pharma do. And upgrading from Elanco. So my theme for the last few weeks is upgrade your quality of your stocks. Elanco is a good company, but 4 times levered. Zoetis has a strong balance sheet and global presence.
You ever owned it before?
Have not. No.
No? All right. Thank you very much for that. Stocks on the move we need to get to. Bristol Myers, their schizophrenia drug falling short of the main goal, phase 3. Jenny, you own the stock. Bristol Myers reports earnings tomorrow before the bell. We can take a look at what the stock is doing after it did fall short, phase 3.
Right. So I think a lot of the information will actually come from the call tomorrow, so it's hard to say too much right now. But when I bought this drug about, 9 months ago, when I bought this company, it was trading at a 5.5% yield. It was trading right about here at 48. And it was not purchased for that schizophrenia drug. What it was purchased for was the fact that it was minting about $10 billion a year of free cash flow. And we thought that they would ultimately be able to buy their way back to growth. So then maybe 6 months ago, they announced this Cobenfy drug. Stock popped up 10%. Now they're getting less great news on it. Stock drops a little bit. I didn't buy it for this. I think they'll still figure out a way to buy their way to growth. But I am curious what they have to say on the call. So I'm kind of like, fine, great, you get to buy it where I originally bought it.
What about Thermo Fisher? Let's look at that stock today. Their earnings did beat.
Yeah,
Let's see what it's doing. What do you think?
I think this is a really interesting example of how government policy is really impacting businesses. And to your point about not needing to say anything positive. So they beat, but they lowered full year guidance. They lowered it from 23.30 to 22.30. And they said, by the way, and Q2, it's like 10% below. So they highlighted things like macroeconomic uncertainty and muted U.S. purchases. They're taking proactive mitigation actions to navigate near-term headwinds. Core business is resilient still. So when you hear people say that, when you hear the CEOs say that, they're taking the exact hall pass that you said they would. They don't want to, they don't want to be too bullish right
The
now.
other thing about Thermo,
you own it too.
We own it too. Is they're also an acquisition machine, so they're going to look for things on the cheap. And it's a great management team that's been there for many years. So it's one of our core holdings. And when things like this happen, this is when you add to a stock like this.
Right. Okay. And it was super rich for a long time. So now you've got
it had a COVID bump to it because all their products were used in COVID. Then it came off, and now I think it's a great time.
Yeah, so now you're trading back at 18 times earnings, 5% free cash flow yield. That's getting more reasonable.
Joe, Capital One, they missed on revs.
They did.
Bank of America reiterates it, a buy today, and they call it a consumer staple. What do you think?
Largest credit card holder in the country now with the integration of Discover. Stock gapped open higher here. Financials, the entire sector is really trading with a strong degree of resiliency. Just pull up Berkshire Hathaway. But in the case of Capital,
but you're leaning on the insurance side of the financials universe
You're leading
to say
on
that.
Clearly, Travelers, Chubb, which reported also strong quarter. You could group that all collectively together, Progressive put in that basket. But I do think financials as a sector has less exposure to the tariff volatility. I do think there's been a degree of surprising consumer resiliency. And to Jenny's point, I don't think we see the real effect of that just yet. But it appears as though whether it's Visa, MasterCard, Capital One, or even to a certain extent American Express, these stocks are stocks that are finding support within the market. You've got buyers that are stepping in and wanting to own them.
What about CME Group?
CME
they
Group,
reported as well.
Yeah, down slightly. I think they needed a little bit of a stronger beat than ultimately they got. There's a lot of enthusiasm surrounding the exchanges on the expectation that volatility remains high, net interest income is going to be positive.
Good for trading.
Great environment for trading. So I think they needed a little bit of a stronger beat, but down tape, I wouldn't sell it here.
Okay. What do you down tape for that stock?
Yeah.
Okay. Let's get the headlines now with Silvana Hanau. Hi, Silvana.
Hey, Scott. Good afternoon. Senator Dick Durbin of Illinois just moments ago announcing he will retire after 44 years in Congress. Durbin, who has been the #2 Senate Democrat for 20 years, said, quote, "It's time to pass the torch." Several Illinois Democrats have signaled their interest in running for the seat, including Representative Lauren Underwood and Lieutenant Governor Julia Stratton. The families of the Uvalde school shooting victims have reached a settlement with the city. City council members on Tuesday voted unanimously to approve the settlement, the details which have not been released. Now, the mayor of Uvalde said the city will also work with the families to create a permanent memorial. An attorney for the families could not immediately be reached for comment. And in New Jersey, 3,000 residents have been forced to evacuate as a massive wildfire continues to burn after igniting yesterday afternoon, fueled by strong gusts of wind and dry conditions. The New Jersey Forest Fire Service said the Jones Road fire has burned 11,500 acres and is now 30% contained, Scott.
All right, Silvana, thank you. Silvana Hanau coming up. Betting like Buffett, there's a new ETF, believe it or not, that lets you do just that. Bob Pisani explaining all of it in today's ETF Edge. Back. We'll go to Bob Pisani now with today's ETF Edge. Hey, Bob.
Hello, Scott. Good to see you. The Berkshire Hathaway annual meeting is 10 days away, and anticipation is already building around what Warren Buffett might say. There's now an ETF for that. Last month, VistaShares launched the VistaShares Target 15 Berkshire Select Income ETF. I know it's a mouthful, but it holds direct exposure to Berkshire, as well as the 20 largest holdings of Berkshire. Later on top of that is an option strategy that targets annual income of 15%. This is very interesting. Let's talk to the man in charge of that fund, VistaShares CEO Adam Patty. Adam, good to see you. You say you can now invest like Buffett and you can get income. So what's in this? How does it stack up against a simple 500 S&P 500 index fund?
Yeah, I mean, look, we've been running, the market's been momentum driven for many years. The switch has flipped. We're looking at quality and a value tilts right now in terms of factor exposures. And Berkshire Hathaway has certainly performed incredibly well this year, handily outperforming the S&P 500. It's a really well diversified portfolio, chosen, of course, by the best investor in the world has ever seen in Warren Buffett. And you've got everything from Apple and Amazon to Coke and financials such as Bank of America and Citigroup. So really well diversified, and it's performing really well in this market. So I think the time is right.
Yeah, and Kroger, I see here, all sorts of stuff here. And this is why you're diversified. Buffett doesn't just hold Magnificent Seven stuff. He is a well-known, diversified investor. He's known for a value tilt. And that has paid a lot of dividends this year. So I guess the message here is diversification, and Berkshire's attitude towards investing pays off. This year it is.
Yeah, stable companies that are hopefully undervalued with that value tilt, as you mentioned, I think is important. And your prior guests, one of them mentioned, the financial exposure that Berkshire has, and perhaps financial companies have a little less exposure to the tariff issues that are, kind of going through the economy. So, we've got a lot of that in there, which is really, well positioned.
Now, Berkshire does not pay a dividend, but you've added an option overlay to this that does pay a sort of synthetic dividend. Now, how does this work, and why did you add that into this mix here?
Well, who doesn't want to invest like Buffett, but with income, right? So to your point, BRKB does not pay one. Warren likes to keep his cash on hand for, repositioning the portfolio. So we did a lot of research, and we found that investors in BRKB, would like to get that dividend exposure. So if you own BRKB, you buy a little of OMAH to add to your portfolio, you get that synthetic dividend exposure. We use an options overlay. We're selling calls and call spreads, and it's a 15% target income annually, which we pay out monthly at 1.25%, which is the goal.
Right, and you rebalance quarterly, quickly, right? How often you rebalance
quarterly?
Quarterly
rebalance on the equities, and of course the options are run daily. It's an active process.
Adam, thank you very much. Interesting product. Of course, we'll keep an eye on Buffett next week. Remember, you can see all of our shows, ETF Edge shows, on our website. That's etfedge.cnbc.com. Scott, back to you.
All right, Bob. Thank you. Bob Pisani. We have a special programming note, of course. Next Saturday, May 3rd, Bob mentioned, we'll be bringing you the entire Berkshire Hathaway annual shareholders meeting live on CNBC, streaming on CNBC.com and CNBC Plus. We will hear directly, of course, from Warren Buffett himself as he takes the stage to answer questions for over 4 hours. Our Becky Quick and Mike Santoli, as always, will be live in Omaha beginning 8:30 a.m. Eastern Time. Up next, a big sell call today on one of the committee's energy names. We will debate it in our calls of the day, and we'll do that next.
AI meeting agent.
All right, welcome back. I want to call your attention once again to CNBC's newest subscription streaming product called CNBC Plus. You can stream Halftime Report, all of your favorite CNBC shows anytime, anywhere, and also on demand. That's what the data feed looks like on your screen. Headlines and stock movers, of course. Speaking of, let's get to our calls of the day today. We do begin with Chevron, downgraded to a sell. Surat, it is your core holding in energy. Redburn today says, get rid of it. What do you think?
Oh, well, you get a 5% yield. The stock's down 6% for the year. And by the way, as oil stays where it is or goes lower, an Exxon and Chevron are in the perfect spot to do acquisitions. So, the big boys are going to get bigger. And I want to hold this because at some point when oil turns around, these, the Chevrons of the world.
You think they're going to be allowed to get bigger?
I do.
I think there's questions about, what was thought would be the case to what maybe is the case. Well, because you're putting that ahead of the slide in oil prices, which according to this firm, the most oil levered of the super majors. That seems to be trumping, pardon the pun, what you're suggesting.
I think it's a very different time than it was in the last downturn because the balance sheets of the Chevrons of the world are very strong. And to your point of acquisitions, they're going to go after pockets of shale, pockets of the small companies that can't survive. So I don't think you're going to see a multi-billion-dollar acquisition, but you're going to see private and smaller acquisitions that will just bolt up their assets.
So it doesn't matter if oil stays in this range.
I don't think so. To me, oil in the 50 to 60, they're fine. If it goes below, I think they're all in trouble. But then the economy's in trouble, so there's a bigger thing. But you're also getting paid 5% to sit on this stock.
Okay, paid to wait. Northrop. Yeah. Price target cut today to 550 from 575. RBC still likes it. They outperform, reiterate it. What do you think? They trimmed their outlook, obviously, but what do you think?
So they announced earnings yesterday, and the stock was down almost 13%. And all they did was they guided EPS down 10% below consensus. And the reason they did that
That's all? What do you mean that's all they did?
That's all they did.
Guiding 10% below
and the stock was
consensus?
down 13% for like one.
That's so big whoop?
Yeah, it is a big whoop, and I'll tell you why it's a big whoop. Because the cost increases are not expected to be recurring. It was due to production increases and by the way, they do also have a complex supply chain. But here's why it's not a big whoop: because they have a record backlog. They have $92.8 billion in backlog. Their international sales are up 11%, and it's not a big whoop when you think about investing for the long term. We've owned this stock since 2013. It's up 400% since then. It's got an annualized return of 14, and when you look through that, here's a one-off down 10% revision because of momentary cost increases. You look through that, and when you look through that, you're tax efficient because you haven't had to pay capital gains along the way, and you stick with this company. It's, by the way, trading now at 17 times earnings, 5% free cash flow yield. To your point all the time, you always talk about permanent compounders. This is a permanent compounding poster child. I want to own that. This does not rattle me.
Joe, CrowdStrike initiated buy at Roth today. We believe that CrowdStrike's one of the best positioned companies in security. I mean, that's already known?
Yeah,
right?
I think everyone knows that collectively we all believe that the investment thesis surrounding cybersecurity is one of the strongest investment theses that you can maintain in the market. Whether it's CrowdStrike, Fortinet, or Palo Alto, these are the vehicles to get you there. I will note you have Checkpoint, which is down today after earnings, and that's really because there was exuberance in the stock. Very long positioning, didn't really deliver the blowout quarter that was expected. That said, I take the other side of the down market in Checkpoint.
All right, quick break. We come back. Santoli, he's on the other side with his midday word.
Hour.
We welcome in our senior markets commentator, Mike Santoli, for his midday word now. I mean, what a session already.
Yeah, for sure. I mean, it made maybe some sense. The pre-markets were up 2% on some less bad or incremental moderation in the trade and, the sort of hostility toward Powell. We extended on more, kind of maybe insubstantial headlines about what China tariffs might look like. This environment, I think most of what you have to understand is we're under a tremendous amount of stress. The market did get very oversold as an initial condition. How much we can make use of that in terms of running to the upper end of this range is the question in the short term as people get chopped up trying to chase the headlines and you have this whole kind of squeeze dynamic that gets in place as well. So I get it that the market in the short term is very tactical and it's going to essentially try to say, is the latest headline less bad than what was priced in 5 minutes ago? Bigger picture, you obviously need broader resolution. You obviously don't really want a market that's popping around 2 and 3% a day in whatever direction. It's just very agitated, and it's not usually, a market where you can build fundamental conviction.
No, but this idea of needing broader resolution, I'm not sure how much of a resolution you necessarily need. I'm not suggesting you need, the finish line, which the Treasury Secretary himself says could be 2 to 3 years. You need a meaningful reduction in the tariff rate on China. Yeah. And then don't you have a feeling that this market would probably take off on that definitive news about that outcome?
I think it would certainly make that attempt. It depends on when. It depends on whether the window is still open for the real economy to kind of weather this reasonably well. Look, the 90-day pause on the extreme version of tariffs sliced off that left super negative tail. Can we slice off another piece of the probability spectrum by saying here's the range of potential tariffs or negotiations that are underway, whatever it might be? That's probably the next thing to look for. The other thing I can't lose sight of is when you see these clusterings of really broad daily rallies around a market low, it usually means good things for a multi-month, forward look. I don't know if you want to really rely on that, but it's hard to ignore the way the market has acted is sometimes building towards something that says maybe we have a decent low in place.
Yeah. All right. Good stuff. I'll see you on closing bell. That's Mike Santoli. We'll do the setup next. All right, let's do the setup. We're going to start with Chipotle. They report today after the bell. You own that stock. And really interesting to hear from them now.
They do. The pressure's somewhat on Scott Boatwright to reverse some of the negative momentum. It looks like Q1 traffic is a little bit on the decline. Analyst community has come out. They've downgraded the expectations here for EPS. Same-store sales for the year. That might have to be cut.
Okay. United Rentals, that's today as well. Jenny, you own that stock.
So yesterday, one of their competitors, Herc, reported, and they had a rotten quarter, but they reaffirmed their full-year guidance. United Rentals is a much better operator, so we're looking for good numbers from them.
All righty. Merck, tomorrow morning, Surat.
Another disappointment here, down 20%. It's going to be about the pipeline and see what they have to say, what's coming down and what they're going to get to. Well, otherwise, this is one that's on my watch list.
What about Pepsi? That's tomorrow morning, too.
Yeah, so Pepsi's an interesting, right? So Coke's been doing really well. Pepsi's got their food side that they need to show, two things. One is revenue growth and also expansion in terms of cost. So we'll see what they have to say for that.
All right, we'll do finals next.
Reset.
Cora.com. All right, we'll talk to Dan Greenhouse, Lori Calvasine, to Jeff Richards today on Closing Bell. I hope you'll join me. We'll see what this market does, and it's anybody's guess at this point, but I'll see you at 3 o'clock Eastern time for that. Surat, what's your final trade?
Salesforce. I love that stock, and I think productivity is going to be there.
Stephen Weiss, who's left an indelible mark on everybody today.
Yep.
Steve, what do you
have? United Healthcare. I think the stock's bottomed. It's gotten the beat out of it. Now I think it's positioned well to move
twice
higher.
in one show's gratuitous. The first time was perfect. Another time was just, like I said, not necessary.
It was gratuitous.
All right, try not to get too excited about this one. Western Union, they report after the close. I think the stock is overly sold off on irrational fears, 9 and change % yield.
Great looking chart. Howmet Aerospace, HWM.
Okay, so we're holding on to a nice gain nonetheless. I'll see you for the final stretch. The exchange begins now.
Thank you, Scott. And we're well off session highs as Secretary Bessent clarifies there are no tariff negotiations underway between the U.S. and China right now. Welcome to the exchange. I'm Kelly Evans, and here's what's ahead. Cracks in U.S. exceptionalism. One of our guests saw them forming late last year and told investors to start diversifying away from the U.S. She downgraded the U.S. market 10 days ago and will tell us where there is better opportunity now. Plus, Tesla up 7% despite those weaker than expected results. We'll dig into Musk's future and what else is moving the stock. And we've talked a lot about uncertainty, but the CEO of this travel company says their business model eliminates a lot of it. He joins us live. See if you can guess the name. It's up 5% over the past week. Before that, though, let's start with today's markets. And what an up and down ride it's been, Dom Chu, on these headlines.
For sure. Not just today, of course, but the last few weeks as well. So, Kelly, you point out correctly that we are well off the session highs, but we are still solidly higher. If it wasn't for the fact that we saw some of the levels that we saw earlier, if I told you that the S&P was up 2%, you'd say that's a pretty darn good day. At 53.91, we're up about 103 points. At the highs of the session, we were up 182 points. At the lows of the session, we were still up 70. So that gives you the trading range context. The Dow Industrials at 39,753 is still up 570 points. We were up over 1,000 at one point. It's still a 1.5% gain and a 3% gain for the NASDAQ Composite at 16,782. It's up about 480 points. Now, one of the big contributors to the massive move we're seeing in the Dow specifically is optimism with regard to one stock in particular, and that's shares of Boeing. Those Boeing shares are solidly higher by about 5.5%, almost 6% at this point, to $171.71, peaking back above their long-term trend line, that 200-day moving average. That's that yellow line that you're seeing right here. Optimism over the earnings report, but also the idea that they're going to try to ask regulators to ramp up production of their very popular Boeing 737 MAX model jet. So Boeing shares a key focus for investors as well. And then on the cryptocurrency side of things, the Bitcoin rally continues. We're now back above the 90,000 mark. 93,772 is your last trade. At one point, we topped 95,000. And just to give you an idea, I put the one-year chart up here for context. This move that you're seeing over the last couple of weeks equates to a roughly 24% move to the upside. But again, in context, we are now roughly 12% below the record highs that we've seen over the course of the past 24 months. So Bitcoin holding up better than many other cryptocurrencies. We'll see whether or not that is at least a foretelling or a tea leaf about where crypto is going to be headed in the next several weeks here, Kelly. I'll send things back over to you.
All right, Dom, thanks. Let's get down to Washington with the Treasury Secretary clarifying that there are no tariff talks underway between the U.S. and China. Eamon Javers is at the White House with all the latest. Eamon?
Kelly, that's right. The Treasury Secretary sat down with reporters here a short time ago, including our own Megan Casella, and rolled through sort of where he sees things standing right now. And he said that there are no talks that are going on as of this moment between the United States and China in terms of trade. He also said a couple of other things. He said that the talks will have to start at a lower level than just the government-to-government executive level between Trump and Xi Jinping, and there's no time frame for those tariff talks yet. He said there's not going to be a unilateral offer from President Trump. So this idea that, we might get some de-escalation first from Trump does not seem to be in play here. He did say and repeated what he said yesterday, that the tariff levels at this height are the equivalent of a trade embargo between the two countries. And he said that the break in trade between the two countries does not suit anybody's interest here. Ultimately, he said there's an incentive on both sides to get to a deal. He also had some strong words for the Chinese government. Here's a quote that we have from him. He said, "I think the Chinese trade minister called it a joke." He said, "They must have a different sense of humor in China than we do, and I don't think that any of this is funny. And Kelly, I can tell you that just within the past couple of moments, we've gotten a tweet here from the Chinese embassy in the United States responding to a lot of this. The Chinese embassy saying, we have said from day one that tariff and trade wars have no winners, protectionism leads nowhere, and to decouple is to self-alienate. This tariff war is launched by the U.S. We have made it very clear that China does not look for a war, but neither are we afraid of it. We will fight if fight we must. Our doors are open if the U.S. wants to talk. If a negotiated solution is truly what the U.S. wants, it should stop threatening and blackmailing China and seek dialogue based on equality, respect, and mutual benefit. So some strong words from the Chinese side this hour in response to all of this from Washington. Kelly, back over to you.
You know, if the Dow were down 600 points or 1,000 or whatnot, it would all take on a very different tone. But the market seems to be in a buying mood on the idea that at least there's, you know, the president is kind of ruling out the worst case scenario or hinting that they expect the tariff level to fall, right?
Yeah, I mean, we're in this sort of weird moment where the president said in the Oval Office yesterday, you know, I asked him if he agrees with Secretary Bessent that this is an embargo effectively between the United States and China. And he said, yes, he does agree that tariff levels this high are very, very high and amount to an embargo. But he told me in the Oval Office yesterday that those rates are going to come down. He said it'll be below 145%. It'll be north of zero, but somewhat below or significantly below where it is now. But at the same time, you've got White House officials saying that, well, you know, we have to have talks in order for that to happen. We're not going to lower the tariffs unilaterally, and also saying there are no talks happening right now. And then you see what the Chinese are saying in terms of we have to have mutual respect. And, you know, the United States is the one that started all this. So where does that leave us? It leaves us in a place where there don't seem to be any talks of any significant level happening right now. And the United States is saying it's not going to unilaterally disarm and lower the tariffs. And the Chinese saying, you know, well, let's see what happens.
Right.
So it's not a great place if you're a fan of progress here in terms of talks.
No, but I think the market is looking through it and saying somehow or other all of this rhetoric is going to turn into something more pragmatic. And if they're disappointed in that, then we'll find out as well.
Yeah, maybe the market is betting the logjam just has to break here at some point.
Exactly. Eamon, appreciate it. As always, Eamon Javers at the White House. The tariff turmoil has only reinforced my next guest's view that investors should diversify away from the U.S. She downgraded U.S. equities to neutral 10 days ago and still sees better opportunities overseas. Beata Manthi is head of European equity strategy at Citi. She's here with CNBC senior economics reporter Steve Leisman. Welcome to you both. Beata, just lay it out for us. First of all, I mean, we're up, 1,500 points in the last couple of days, and gold is behaving a little bit more calmly and so forth. I mean, is there a sense that the worst is now over from the market's point of view or not?
Hard to say yet whether we are out of the woods, right? But there is definitely the moderating rhetoric that is coming out of the White House and the sense that the markets want to stabilize. So everything depends how much damage actually has been done underneath the surface in terms of corporate and consumer behavior and confidence, right? Too early to say. We are seeing record level of downgrades from the analysts for the US market, but also for all the markets around the world. There is really nowhere to hide. So more EPS cuts are going to come through. Definitely some damage has been already done. But at the end of the day, for equity markets, it's always about what kind of outlook has been priced in beforehand, right? And what we argue, and this is where this downgrade of the US, which, by the way, we've been already flagging the need for diversification since late last year, early this year, with Europe being our preferred diversifier back then. What we've done recently, we've put as overweight markets that price in or were pricing in at the bottom of the correction the biggest amount of bad news. So for us, that's Europe, actually not only continental Europe anymore. We've upgraded the UK as well in the global allocation, and also Japan, that has been an underweight for us until very recently. But at the point on the post 90-day post day, our models were telling us that Japanese market has been priced for EPS contraction. European market has been priced for flat EPS, wiping out all the gains or the growth for this year. While the US actually is still priced in line with the analysts' forecasts, which are still for around double digits right now.
Okay, so we basically haven't gotten things bad enough yet. And Steve, I know you're looking at the data, and as we've talked about, you talk about the Philly Fed, you talk about some of these regional manufacturing indices, even non-manufacturing, doesn't look so great, but employment is still holding up. We're not getting a breakdown in those kind of key areas yet.
Yeah, I'm really interested tomorrow, Kelly. You have the durable goods report, and we'll get a bead on what's going on with actual investment. We've heard stories about, and it's also in the soft data, in the commentary there, that capital spending is being held back because of the uncertainty. And it'll be interesting to see whether or not that becomes an issue. JP Morgan with an interesting piece today on the decline in travel. It's not a big hit to GDP, but it could be a big hit to some of the travel-related companies and the travel industry, where there's some fall off in foreign travel coming to the U.S., both leisure, business, as well as education travel, which is a big part of that. So that's something to watch. It's a whole bunch of areas to look at, Kelly, and frankly, I'm trying to figure out how to, advise on trading this market, and I don't know, because we had that discussion with Larry Lindsay on Monday.
Right.
He ended up being right, but I will go to my grave and tell you, reporting on the idea that the president was thinking about firing the chair, that was not fake news. It didn't turn out to be the news, at least not yet, but it was not fake news at the time with the comments that had been made both by him and people of his administration. We have these high tariffs on China. There's good talk about the possibility of them coming off, but there's also contradictory talk. So I'm not sure which way to lean on all this. I guess the best advice I have for anybody is stay on your tiptoes.
Maybe the market signals matter, Steve, right? Like maybe the administration, maybe Musk, maybe they're looking to these, to the sell-offs, to what's happened to Tesla's share price, to everything else. And maybe that's, someone used the language of capitulation.
I think that's a clever comment, Kelly, and I'll tell you why. You have to ask yourself the question, does the president back off of this business about firing Powell if the Wall Street Journal doesn't write a very harsh and sternly worded editorial that tells him what folly this is, as well as our commentary and coverage here on CNBC
I wonder
and
about
the market.
that too,
Sorry?
but I almost worry about the opposite effect, right? That it's not as if the edit page has been, his biggest fan over the years. And when I see that article coming out, I think does it make him dig in his heels? So I don't know I don't know if it's the pressure from the press. I don't know if it's just the facts of the market. And it sounds like Secretary Bessent understood the urgency.
Yeah, that was what I was going to say. The other theory out there is there's this sort of ascendant Bessent wing inside the White House that is advising the president on calmer and cooler approaches to our allies. But the thing is that even when you get past all this, at the moment, Kelly, these big tariffs are in place, and things like our guest here who's doing that kind of modeling, I think you got to keep the numbers in as the numbers are right now, and they do lead to negative GDP, increases in unemployment, as well as boosts in inflation.
Beata, where do you stand on the Chinese market? Is that in your models?
It is in the models, absolutely. So I told you what we are overweight. We are overweight the very cyclical markets today, but those markets that price in the biggest amount of bad news. What we are underweight right now is the emerging market space, with China being part of it. China is only neutral within the emerging market space, but emerging markets are an underweight. So another cyclical market, which actually isn't as cheap as Europe or Japan, for example, and then Australia is another underweight. So we have a balanced portfolio because there is so much uncertainty, and we really don't know how much damage has been done or will continue to be done. It's very difficult for investors right now to take on very directional calls, right? So we are balanced between cyclicality that has priced in a lot of bad news versus cyclicality that hasn't as a hedge, with the US being a neutral in between. Now, if you told me that the tariffs are over and there is going to be a deal with China, of course, that's not the position you would like to have right now. However, I think it's a nice way of framing the risks going forward and what it means for the sectors as well. We have a balanced approach with some cyclicality, some defensiveness, and some growth, selective growth in overweights, and some counterbalance in underweights as well.
You like tech for growth. You like financials in the cyclical space. Healthcare is the defensive. Beata, thanks for joining us. We'll leave it there today. We'll check back in soon. Beata Manthe, Steve, as always, appreciate it. Steve Leisman as well. My next guest is also a fan of the international trade, and we'll get to that. But it's also Alphabet that's got his eye this week. They're supposed to report earnings tomorrow, and he says the opportunity to get in is now. Let's bring in Tim Seymour, the CIO at Seymour Asset Management and a CNBC contributor. It's, front running these things, Tim, is always dangerous. Welcome. So curious for your thoughts, especially as people look through the sell-off and think, okay, where are the opportunities now?
Well, consistent with your last conversation, which I thought was thoughtful, there's no directionality here when you're investing at Google, in my view. And again, part of this is a story that Google sentiment is so poor and the valuation is so attractive, again, relative to growth tech. And I also think more, at least, immune from tariff dynamics than other of the larger, big mega cap tech stories. 10.5 times EV/EBITDA, a PEG ratio of a little over 1, in a world where I still think we are going to be pricing in lower equity growth, possibly a lower multiple on the S&P if we are, whether we're dancing with recession or not. I think the multiple is important. The valuation at Google makes it a lot more compelling in this environment. I would just also highlight, two big companies that the market's always seemingly focused on, in Netflix and in Tesla. Netflix had fantastic numbers. Tesla's numbers kind of as expected. But in both those releases, there was two elements of the story that I think are very Google positive. If you think about Netflix, their growth is tremendous, but they cited YouTube's really outperforming Netflix in terms of consumption growth for a streaming world that we know is part of a secular trend. YouTube is not really priced into Google's valuation. I think there's an element of this that I think is at least underappreciated. And in Tesla, we had a fascinating conversation last night with ARK Invest's futurist, who was pointing that, like many people, the value in Tesla is really around robotaxi, and that the hardware and the auto company is something that's not really where you should be looking. I at least agree with the auto part being overvalued. Waymo is something that I think is also not given any valuation credit, at least underrepresented if you think how much Tesla gets from robotaxi. So I just think the sum of the parts on Google makes it fascinating, and I think it is non-cyclical here.
Yeah, it's always interesting. Look, Google's a much bigger company. I forget what our analyst yesterday said. Maybe Waymo's a $35, $40 a share business out of a $135 stock. And if AI is the future, as Google's in this trial, it has these kind of third parties testifying that it's not getting as lucrative ad dollars, I guess we would say, from its AI summaries as it was from its traditional results.
I just think that when we think about Google, we're always challenging their core business. We're always looking at regulatory pressure. The reality is this is a company that is a high margin business. Their cloud business is high margin. If we're willing to give Amazon that benefit of the doubt, why aren't we doing that for Google? And again, I just think these couple elements of the story are very underappreciated, and the valuation is defensive here.
Yeah, you have so many other kind of interesting nuggets here, Tim, that I just want to quickly run through. First of all, on Boeing, you say stick with it. You've been saying stick with the international trade. I don't know if you'd kind of come at it differently from what we heard from Beata there.
No, I like that approach. And again, with Europe, you have a dynamic. I still think the currency backdrop is your friend. I think if you think about EPS, the delta on the revisions here for Europe are very much favor that over the U.S., and the valuations are still cheaper. So I still believe the fund flow argument is something that's going to favor international investing. That means international folks investing more in their economies and in their markets. And I think U.S. folks, even a little bit of an allocation switch puts a lot of upward pressure on markets like the DAX. That's outperformed the U.S. in dollar terms by almost 40% since Thanksgiving. I run an international ETF, IDEVO, so I'm biased here. But I think this multi-year underperformance of international is something that you're not fading on a day like today. You're picking your spots to get into it.
That's an interesting case. Okay, so quickly on the consumer before we go, we are going to check in with the travel company a little bit later on. You're a little wary of what's going on with the consumer and what that means for some of the credit names.
Yeah, I think we certainly have almost full employment here. There are dynamics, though, around pressure on the consumer that I think we've seen start to feed through some of the credit metrics. Certainly, we know the size of the credit profile. I just think on a day like today, when you have buy now, pay later story soaring, and they've had a chance to really bounce. That story was not really a tariff story. It wasn't necessarily barreling into recession, because either way, with a tariff backdrop that's either as it was or not as bad as it was, I still think there are pressures on the economy that are going to play out. Therefore, it's not tomorrow. But I just think the buy now, pay later story, part of the headwind on discretionary names that are some of the most obvious names in consumer products we know, is part of a story that's going to feed through to buy now, pay later. I think the valuations make zero sense, and I would be a seller on this bounce.
Well, strongly put, I should say. Tim, really appreciate your time today. Thank you so much. Yes, Tim Seymour with Seymour Asset Management. Dow's hanging on to still about almost a 700-point gain today, and the home builders are in the green by about 1%. Fresh housing data showing the little bit better news on that front. Let's bring in Diana Olick with the very latest. Diana?
Well, Kelly, timing is really everything in the latest reads we're getting on the housing market. First, we got the new home sales report for March this morning, and it showed a nice jump higher month to month. But that came after a very weak start to the year, which some blamed on a rough winter patch with extreme cold and storms. So this was a bit of a give back. Now, the median price of a new home sold in March was 7.5% lower year over year. Some of that is the builders dropping prices, but a lot of it is also a jump in sales of lower priced homes, which then, of course, skews the median lower. Mortgage rates also came down in March and stayed in a very tight range for the entire month before shooting higher in April. And that's where the timing comes in and why we're seeing a much weaker market in April. We see that in the demand from weekly mortgage applications to buy a home. They were rising in March and have been coming down sharply in April, much as they did in February when mortgage rates went higher as well. More valuable than all of these numbers, though, is commentary that we're getting from the home builder CEOs on the ground today as they report quarterly earnings. CEOs of D.R. Horton, Pulte, and Taylor Morrison all said demand pulled back in April amid economic uncertainty, concern over tariffs and inflation, and, of course, the stock market rout. Taylor Morrison CEO Sheryl Palmer called 2025 a speed bump on our path. Kelly?
All right, Diana, appreciate it for now. Diana Olick on housing. Still to come, Tesla rallying despite its earnings miss on some positive commentary from Musk about his future plans. B of A cut its price target from $380 to $305 yesterday. The analyst will join us next with his reaction to the quarter with shares around $256. Plus, Morgan Stanley says tariffs pose a bigger risk to equities than to bonds, at least for now. We'll speak with the CIO of their investment group about today's rally and why they're staying bearish on big tech. We're back after this. Stay with us.
This is The Exchange.